Hello, welcome to a new webinar series from Wenalyze. Today we're introducing a webinar series about commercial insurance and specifically about data-related topics. This series have a format of an interview with experts from the industry. My name is Roger, I'm Chief Operating Officer and co-founder of Wenalyze, and today I have the enormous privilege of speaking to Florian, who is founding partner at astoryaVC. Hi, Florian. How are you?
Hi, Roger. I'm fine, and you? Thanks a lot for having me, by the way.
Always. So, Florian, maybe there's still someone out there that doesn't know you. What do you do at astoryaVC?
Yeah, so basically, astoryaVC, we've been on the market for close to 4 years now, and we are an investor investing in InsurTech with a very strong focus on tech applied to insurance. So a lot of B2B software, enterprise software, etc. I guess that we'll deep dive there. We invest across Europe. We are based in France, but our portfolio is highly exposed to the European InsurTech scene. And we invest very early. We invest at seed stage, which we usually define as a post-product. So sometimes it's even pre-revenues for several players in which we have invested. But long story short, investing in InsurTech in Europe and at seed stage, that's what I've been doing for 15 years now.
That's great. So that means that you must have a broad vision of the state of InsurTech and insurance industry in general. And we're talking specifically about data in commercial insurance. So my very first question is, from your perspective, what is the problem with data quality in commercial insurance?
Yeah, that's a very good question, because I actually started investing in InsurTech a few years ago at the very beginning of the InsurTech wave, and I was lucky to be part of AXA Ventures. And I was quite surprised because I was discussing with business line people, and all of them were saying that insurance is all about data. And then I had a look at my own case, and I was a bit surprised because the truth is that my insurance carrier has very limited and poor data about myself. If I take the example of my company, it's exactly the same. They have limited data. So I found it very strange. And in the competitive landscape, I had in mind that obviously insurance companies have limited and declarative data most of the time. Banks have more data because they have your transaction data, which says a lot about who you are as an end customer or as a company. And on top of that, you have vertical platforms that have basically everything data about their customers. So that was my first surprise when speaking about data. And to be maybe a bit more specific about the use case of this data, I see two challenges / two opportunities in insurance. The first one is at the subscription moment. And obviously having more data or more relevant data is helpful. First, towards smoothing the process. That's something that we hear a lot, especially in P&C, so targeting end customer, but it could be the same with SME or commercial insurance more generally. The idea is to have less questions or a smoother onboarding to make it more effective and have a higher conversion rate. I remember... Yeah, go ahead, sorry.
No, go ahead, sorry.
No, I just wanted to share an example here. The best, I think, example or the most impressive example was Alan doing health insurance in France. At the very beginning, when they launched the company, they had only one question. What's your age? So it's funny because not only was it only one question, but it was not when were you born, which is the usual question, but the other way around, it was what's your age, which is even smoother. And then they requested a few documents so that they could gather additional data, your address, your name, blah, 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 on documents that you already have and that you can take a picture of. So that's the example. And we see a lot of InsurTech players that are advertising the smooth onboarding. On board in 3 minutes, on board through 5 questions. So that's a real challenge to try to smoothen the process. And it's, again, also very true in commercial insurance. The other moment, I think, where data are key is alongside the contract life. First, to make sure that you can track any update in the company. So here by design, and hopefully the company is growing, there are more employees, maybe you are moving your offices, you are opening an offices outside of your domestic market, you are renting new IT devices, etc. So let's say the level of insurance that you need is changing alongside the time. And it's quite unrealistic to consider that you can answer a lot of questions again and again, let's say every year, just to get an update on your customer. So the truth is that usually you don't really update your understanding of your customer alongside the contract life. And it's related, I believe there is the challenge to make sure that the insurance policy you're paying for is aligned with your real risk level. So that requires to perfectly understand your customer need, especially in commercial insurance at the subscription moment, but then make sure that you can track the life of the company itself to potentially adapt the insurance policy accordingly if there are more people, if the company is moving, if the company is launching a new business line, etc., etc. So I see these two moments, subscription and alongside the contract life.
Absolutely. I couldn't agree more. And indeed, the insurance industry is a data-based industry itself. The two moments where there's an exchange between customer and insurance company is submission or renewals, or maybe claims. But sometimes in claims, you are giving data about the claim itself, but not about the business, right? And we see a few challenges during the submission, as you mentioned. A lot of questions might mean that the process is very, very slow. And also there are a lot of inaccuracies because it's a manual process. And then during renewals, for example, our case at Wenalyze, we've seen how our policy gets renewed every year, but no one is asking us if something changed. Because we are very aware of this, we all every year update our information, but I believe that not all the SMEs, not even the majority of SMEs, are telling the insurance company if something is changing. So it's very hard when the insurance company is not asking you and you're not telling them to really align your coverage to your needs. And with that, I would like to ask you, so now that we know very well the problem, what type of solutions do you think insurance companies need?
Yeah, obviously, and I'm a bit biased because I'm investing in InsurTech and again, in tech solution for insurance companies. So I strongly believe that maybe not all the answer, but at least an important part of the answer is coming from the startup/InsurTech scene. And the rationale behind is that I believe that in tech and in data more specifically, startups are more flexible or accurate to leverage this kind of new content. So the challenge is to access new data sets. And here again, seeing things with a new eyes, it's a requirement to have this kind of flexible mindset to find new opportunities and not only to rely on what you've been doing for ages. So that's the first competitive edge from InsurTech and more generally data startups. The second point is spot relevant data sets, because the idea is not to have everything data, it's also make sure that you use the data that are the most relevant one. Otherwise, too much noise or again, it's rather finding the highest accuracy level and not necessarily the highest level of information. And the third point is getting sense of this data. So basically building algorithm, etc. And I believe that here and again, startups are more flexible than big corporates. So I tend to believe that the opportunity to work around data is something for InsurTech startup. That's why we invest in that space, by the way. But most of the time, and more generally, I think that in the insurance industry, maybe in other industry as well, but I don't know all of them perfectly, it's usually more effective to outsource the tech part. I think that it's always difficult, let's say, to attract talents, but most of all, what we see as a pattern among corporates is a kind of, and it's around the make or buy dilemma that we see at every insurance company on every tech-related topic, including the data. And what we see is that most of incumbents usually start building their own solution. Step one. Mm-hmm. Step two, they fail. Step three, they look for an external solution. So that's the pattern. Now that we have said that, we fortunately see a few players that are bypassing that pattern and that are directly jumping to step three, which is, okay, instead of trying to build something that will not work internally for plenty of reasons, let's rely on an external player that is more relevant, again, and more flexible to access new data set, to spot relevant data, and getting sense of this data, which is the three challenges I see. So to answer your initial question, I definitely believe, and that's where we are investing, that tech solution or data solution for insurance company are more accurate, and that's where the answer should come from.
Mm-hmm. Yeah, I think it's very interesting to see how the perspective from insurance companies have been evolving in this topic. The stage where they tried to invest millions of euros or dollars in building a solution and then failing. We've seen cases where the insurance company understands that data is very important, and that is why they invest a lot of money in building a very strong data analytics team. But the thing is, you can have a very good data analytics team, but if your data is bad, inaccurate, and old, then they cannot do magics, right? So the data ingestion step is very important. We need very good data to make good things with the data. If the data is bad, it doesn't matter how good we are, because we're gonna be able to do a good job. From your perspective or your knowledge, what popular solutions do you know in the market for these data ingestion or third-party data providers?
Yeah, maybe just before answering that question, I think that I have an example to illustrate what you just said. It's around the data lab. We have plenty of examples of corporates that launch their own data lab initiative, and the one that I know the best is AXA Data Lab, because I was at AXA Ventures when they launched that initiative, and we can assume that they invested a lot of money in that initiative. The truth is that at the end, most of players that were part of it left the data lab and launched their own InsurTech company. I think that Chief, Zelros, Contev, these guys are or were around that initiative internally. So I think it's a good example of not only the challenge to attract talents, which is a challenge for corporate, but also to keep that the talent or these talents internally. So I highly see that even if it makes sense for them to try to launch their own initiative, again, there are several pitfalls that they will face in the future. And what I find interesting also around the data thing specifically is that there is a counterintuitive pattern. The truth is that you, as an incumbent, you have an interest that the solution you're leveraging is working with your competitors. Because around data, the more data you have, the more accurate data you have, the better it is. And around algorithm, it's all about having a lot of data points so that it can make the algorithm even smarter. So at one point you can consider that your solution is a competitive edge, but the truth is that if you're working with Wenalyze and your competitor are also working with Wenalyze, it makes Wenalyze more effective, and then it's a benefit for you as an end customer. So you have an interest that your supplier or partner is working with all the market. So that's highly counterintuitive, but that's the magic with data. And in my answer, obviously, I consider that around data in commercial lines, obviously what you are doing at Wenalyze makes a lot of sense. And I think that more and more incumbents will realize that this kind of market trend will benefit each of them. And that's where if you build your own solution, by design, you have limited effects because you rely only on your own data.
Yeah.
So I'm not saying that solutions are mixing data from several players. Obviously, it's really clean, but the algorithm in itself is benefiting from working with several players, which are maybe competitors on the ground, and that could also benefit from different geographies. So that's a double, let's say, angle to benefit from working with external solutions. And that's why I believe that InsurTech and data startup more generally are relevant. And then I think that there are two kinds of players. You can either go to data solutions. The competitive edge here is that you could learn from other industries, or you can go to an InsurTech company, which is designing solution for insurance players as a whole, so mutual, reinsurance, claim managers, etc., brokers, agents. And what we see in insurance is that usually insurance players love insurance-related solutions, which is related, I believe, to the industry itself, which is usually, let's say, advertised as a very specific and complex industry, which I believe is partly true. And then it's more effective to work with an insurance-oriented solution, even around data, rather than embracing horizontal solutions. So that's the kind of player that we think are the most relevant, is data players applied to insurance. And then I think we could also divide it between end customers and commercial lines, which are slightly different in terms of needs and in terms of the data set that you are leveraging.
I completely agree. I think it's a very interesting comparison between just pure data providers that can sometimes work with different industries. So they're not necessarily focused in insurance, but they do have data that is important for commercial insurance versus InsurTechs. So sometimes when we talk to corporates, they consider other players like Dun & Bradstreet as a competitor, and they do have a very powerful database, especially for financial data. But I think the point here is you can partner up with them for a very specific use case, but the moment you try to escalate with them or to do something different or out of the scope, then there's not much you can do because they're not going to adapt their solution to every one of their customers, every industry they work with. However, if you partner up with an InsurTech, then you can think about one use case, but after that use case, you have another one and then another one because they want to cover as much points as the value chain as possible. And another difference, I think, between those data providers and InsurTechs that we see a lot of the times is that some of these data providers do have a very good database, but this database is updated only once a year. So this means that you might be accessing data that is 10 months old or 11 months old, which might not be the reality for that SME or for that business. Whereas with other type of intelligence, for example, the one we use, we're always choosing what is the data point that is more updated. So we are always offering the most updated version of the risk of a business. I think if we can summarize here, to understand why insurance companies should be partnering up with insurtechs or even data providers, depending on the use case. My question is, why are not insurers developing this type of solutions themselves? What are the problems they face when they try to do that?
Yeah, so for the first point, which I briefly mentioned before, is around people. So attracting tech talents is a challenge. And the reality from the ground is that you have tech giants that try to attract the best tech people. Then you have startups that try to attract the best tech people. And then you have, let's say, incumbents, whatever the industry, that try to attract tech people. And this hierarchy is what we can see on the market. So basically, there is a war for talent, if I may use the word. So that's the first point. And again, the example we mentioned earlier around the data lab initiative is that even if you manage to attract talents, you need to keep them on board, which remains challenging. And that's what we more generally see around entrepreneurship. It's quite funny because we see two kinds of people. Corporate people, they don't move fast enough. So the project fails because the kind of internal startup is not moving forward fast enough. On the other hand, you have real entrepreneur people that feel a bit locked into the corporate environment. And usually it fails because they cannot match with the corporate culture. So I obviously take the two extreme examples just to support the case. And obviously there are plenty of internal initiatives that are successful because you find the perfect mix between corporate people and entrepreneur-free people. That's a real challenge. And that's part of the challenge of keeping them on board. And the last point is around the value proposition for them. It's nice to develop things internally, but what matters is the value that you get at the end of the project. Working with an external players all of a sudden opens the door to many opportunities because, again, the external player is probably working with other players on the market, and you can benefit from that. So in pure value proposition, it's more impactful to work with somebody else outside of the company, though obviously there is a challenge to build that relationship between the startup and the corporate. One maybe best practice is to move forward step by step. So the idea is not necessarily to cover everything day one. It's to start with one portfolio, one kind of risk, and then add another one, add another geography, add a new business line, etc., and then build and grow the relationship alongside, let's say, the flexibility you have and the feeling you have that the startup is definitely providing something helpful to your company. It reminds me something I was discussing with an incumbent a few years ago around API. They had not really started building the team around API, but the first question that the guy raised in front of me was, okay, but how to deal with 1 million customers? And I say, okay, maybe let's start with building the API first. Yeah. And even before, build the team, build the API, test the API on a small sample, and then if it works, let's make it at scale to reach the 1 million customers that you mentioned. But you cannot switch from 0 to, in that case, 1 million customers served in a minute. It needs to be step by step. So I think that this is the best practice, and usually that's the pattern that we see among corporates. To come back to your question on why incumbents are not, or why should insurance develop their own solution, it's that basically they want to cover everything day one. So they build something that is supposed to answer every question at the same time, which obviously is not the startup mood. And again, there is nothing personal to the insurance industry. That's the innovator's dilemma, written 25 years ago, still relevant, unfortunately, but that's the pattern. Incumbents don't have any incentive to innovate and or try to solve everything, and obviously it doesn't work. So that's the challenge, to find the perfect balance between trying to solve something and then grow the answer alongside the time.
Yeah, absolutely. I feel can identify very well the pattern of trying to do everything at the same time. It is something that we ourselves try to do at the beginning as a startups, of course, but we also see that as a requirement from some of the insurance companies. And sometimes we say, okay, we can do a project with 2 million customers with 50 data points per customer. So that means we have 100 million data points. So that's a lot of data points to check, and we don't have the time to check it manually, of course. So it makes more sense to go step by step. And in our case, as we are providing this external data about SMEs, let's choose the 2 most important data points for you, which are activity and address, which are very basic, right? Well, it is surprising how wrong and how inaccurate those can be, because they are old, or because the submission process had a mistake, or because they chose an activity that was similar, but it's not really the activity of that business. So we always say, let's do a demo. Let's do this first. I know you want financial data. I know you want to understand what's the cybersecurity that they have. But if we don't know what is the business doing and where is the business, it doesn't make much sense to try to do other things or to try to predict what products they need or to apply machine learning and AI if the address is in another town, right? So we should first focus on that. And in addition to your thoughts, I found it very interesting when you made the difference between someone who is an entrepreneur within the corporate and someone who doesn't want to change anything, or who are, let's say, comfortable with what they're doing, or maybe they're just too busy to think about doing something else, right? We find that kind of perspective or mindset, and I could count a lot of occasions where we talk to somebody in an insurance company and they are convinced about what we're doing, and they see the problem and they see we can provide a solution, and then the sales process is transformed into a convincing process. So we convince this person, and now this person has to convince other people within the corporate, and it's a lot of conversations to try to change their mindset, to try to sell them that this is worth it, and it becomes more a process of talking and teaching, if I can say that, rather than demonstrating your solution or your technology. And this entrepreneurial person even becomes some sort of sales agent within the corporate. And what we see a lot of times is that if there's this misalignment that you mentioned, then these people look for other opportunities. We see a lot of people we work with in insurance companies who said, okay, this is enough for me. I'm not meant to be part of a corporate. And they jump to InsurTech and they start working for the startup.
Or the other way around. I mean, let's not
yes.
make the audience think that it's only a one-way process. We see exactly the same the other way around. Again, that's 2 different mindsets. There is no good and bad mindset. That's 2 different mindsets. And I think that it's related to the goal. That's usually the example we take with the IT team. Again, I'm always impressed as an entrepreneur investing in seed startup to see teams that are running IT infrastructure that are serving millions of customers. That's quite impressive. But their job is to make that infrastructure work for millions of people. It's not to launch a new service. So that's, again, 2 different goals. At one point, they need to merge because, again, when you test something on a sample, at one point, you need to make it at scale. And if you want to make it at scale, you need the IT skills to make it run for millions of people. But again, what we are saying, and that's exactly why I'm raising the point at that moment of the discussion, is that we need to move step by step, and that's 2 different mindset. innovate, try things, build things differently, or again, make things robust so that you can, let's say, drive millions of flows. And the challenge, and what is the very difficult part, is to manage the merge of the two at one point of the project.
Yeah, absolutely. I think another question comes to my mind when we say that we have to go step by step. Sometimes, depending on who you talk to from an insurance company, of course, they have different priorities or different areas they want to touch or apply our solution for. And our suggestion is, let's start with your current clients, because you really have data about them. And let's do an analysis on how wrong this data is. So I think we have these two moments of data exchange. We mentioned submissions and we mentioned renewals. So my question is, how do you think solutions work differently between new risks and current clients? What are your thoughts on that?
Yeah, that's interesting, and I think it's important to come back to this split in the data and in the risk environment, because one might think that everything that we are speaking about, reaching and spotting new data sets, spotting relevant data and getting sense of this data, may apply rather to what we call new risks. The truth is that so first, maybe what we call new risks are basically risks that are not covered by all the market, that are quite recent compared to home, health, car, where incumbents have a huge data competitive edge because they have the claim for ages, and risks that are kind of surging. So the example we usually raise to illustrate that new risk category are weather-related risks, cyber risks, and now digital assets around crypto, NFT, etc. That's a challenge. So basically, for this example, you don't have, let's say, commoditized solution yet. You usually lack data to get sense of the risk itself and then to price it. And that's obviously one use case of illustrating that data are key to first understand the risk, then price the risk. So that's kind of obvious. But there is also an opportunity around existing / commoditized risks. Again, back to what we mentioned before, to make the subscription process smoother, to better understand your customer, and then suggest the most relevant policy, and to update what you know about your customer alongside the contract life. That's opportunities that are on the table for, let's say, existing risk. And that's what you mentioned before, saying we suggest our customer or our lead opportunity to start with existing customers, because they know them, they are already covering them, and usually it's the best way to show the value that you can deliver to them, because all of a sudden they thought that the company was there, whereas actually with more accurate data, they are there. So long story short, the policy that you were offering should be this one and is currently this one. So there is, let's say, an alignment of interest between the end customer and the insurance company to know that gap between the reality and what they are covering, so that they could better, let's say, match the reality with the policy. So it makes perfect sense, and this example works very well on existing risk. You don't need to move very fast in the future, very far in the future, to leverage this opportunity. And beyond that, new risk / existing risk split, what is worth mentioning, I believe, is that we see more and more startups, InsurTech startups, addressing the price and product part of the value chain. So I think it's related to what we are discussing right now. For a few years now, we are tracking investment in InsurTech Europe, and then we are splitting them alongside a simplified version of the value chain. One section is price and product. This section is a mix of new risks, So solution enabling insurance companies address these new risks. And there are players that enable insurance company address existing risks in a new way. So we put, for instance, the example that we take usually, it's telematics in car insurance. It's a new way, or kind of new way, depending on your market. It's a new way to address a commoditized risk. Data for SMEs is in that category as well, because that helps better understand the risk in something that has been on the market for years. It's just a way to better do it, to be more effective, either to improve your loss ratio or just, let's say, try to upsell your customers, or just to make sure that your portfolio is aligned with the reality. So that's how I see the data opportunity. It's a requirement in new risks. I remember of Swiss Re chief underwriting officer that mentioned that cyber risk is to be their biggest business line in the future, but so far they stay with a limited exposure until they have more data, which I find relevant because that's the key challenge for cybersecurity. But let's not make the audience believe that all the discussion we have around data in insurance applies only to new risks. That's a huge opportunity, not only in terms of effectiveness, but also in terms of generating additional revenues to have a more accurate view on your customers. And that's, by the way, what you are doing with Wenalyze on commercial risks. But that's a real use case that you can apply tomorrow morning. You don't need to wait years, and you don't need to only leverage this opportunity towards new risks.
Yeah, I think that last remark is very important. I think we usually think that the opportunity is in the risks, and the opportunity of growth is in new products. And we tend to forget that sometimes we already have a very big portfolio of customers that also have selling opportunities there. We can upsell when we realize that that business we had as a client don't have 5 employees anymore. They have 50 employees now. So we can update all our data, our traditional data, let's say, and then do that upselling, prevent the premium leakage, and then increase our growth within our current and existing customers. I think from the marketing perspective, sales perspective, it is very sexy to target new clients with new products, but we tend to forget that there's a very big within existing products. I think another thing I found interesting is how you said the cybersecurity issue. Insurers want to sell cybersecurity, but there's no historical data to be sure how to do it. And we've been finding that, and we've been finding insurtechs that are trying to build models around, let's say, alternative data, new data that has never been used before. And I think that split between new risks and current clients can also be done between traditional data and non-traditional data. So in our case, we always say, okay, we have both, and we know that both are very useful. If we go step by step, then we should start with the traditional data. And then eventually we can consider alternative data that is very interesting. For example, we can identify if an SME has good opinions or bad opinions from their clients, and see if that is linked to the risk of that SME to continue their business. We can track how the opinions evolve, saying, okay, opinions are good, but last month, all the opinions were very bad. So we can flag them and say, okay, there's an action that needs to be taken for these SMEs, right? So there are multiple scenarios, multiple ways of using alternative data. But as we are saying all the time, we already have a very big opportunity in what we have been doing until now, without changing anything, without doing anything new, just doing it better. And then on the next step, we can try to do more innovative things once whatever we're doing nowadays is done properly. I think my next question in this sense, now that we're speaking about solutions and different ways of doing and applying open data, is how integrated do you think these type of solutions will be in the next 5 years, more or less?
Yeah, I think that it makes sense to raise the question with that time frame. I mean, 5 years, because insurance takes time, and I think that what we are discussing right now, especially around existing portfolio, existing risks, we see corporates testing this kind of solution, paying for this kind of data. Again, when I refer back to the process of building internally, failing, looking for an external solution, that's usually 18 to 36 months. So a year and a half to 3 years. So plenty of players which are currently working on building their internal solution will come back to the market in a year, 2 years, or 3 years from now. So that's more than half of the time frame that you shared. So basically, they will come to the market looking for these kind of solutions. I believe the second pattern is in insurance, again, probably in many industries as well. Incumbents are following each other. So the challenge is rather to get the first customer or the first customers, and then there is a kind of snowball effect, and all of a sudden you have plenty of players that comes to you because they know that your solution is working, having in mind what I mentioned before, which is that if you work with a solution that is working with your competitor as well, it's beneficial for you. And the third point is, again, I think that more and more corporates are looking for solution that delivers clear value for them. This is obvious, but a few years ago, there was rather maybe a race towards having as many proof of concept as possible, working with as many startups as possible. Now we see C-level people looking for solutions, a limited number, so they will not work with dozens of startups during the year, maybe 1, 2, 3. They have the budget for that, they have the time, they have the roadmap for that, they have the team for that, but they want to make sure that they could get value quite quickly. And I believe that around data, there is an opportunity to perceive the value very quickly in the process. Because as you mentioned, it could be only updating existing data. So you don't change anything. You just show that basically relying on the data that the insurance company is already gathering, either they are not accurate since inception, or they have changed and nobody is aware of that. So that it's just the picture that you have of your customer is updated. And then obviously you could show that adding additional value, data could deliver additional value for the corporate. So I think that the more they will feel the value, the more they will embrace these kind of solutions. And again, if insurance is all about data, it would be a pity not to leverage the huge amount of data that is available worldwide. So basically, I believe that this switch in terms of mindset, saying, okay, we've been working with this kind of data, rather declarative, etc. Okay, maybe there is a way to be more effective and to get more value for us and for the end customer by leveraging external and new data sets. So in 5 years from now, I expect more and more players to leverage these kind of external solutions, relying on InsurTech startup like yourself at Wenalyze, because they would need this kind of intermediary to get the most of this data. Because as you mentioned at the very beginning, it's not about the amount, it's not only about the amount of data, but it's spotting the right one. The example that you shared with how the company is perceived online is something interesting. I believe, or I assume that in several cases, it's relevant. In several cases, we don't care. So it's not a matter of applying systematically that kind of data. It's to make sure that when relevant, you have the data.
Absolutely. And yeah, I agree with the thing you mentioned about before a few years ago, insurers try to run as many POCs as possible. And we've seen how that process is now more mature, where insurers are very selective on who they do demos with, because they realize that it means POC means that they are investing their time. That means investing resources, even if it has no cost. And we've seen that they are asking for more guarantees. So I think in that sense, the industry is maturing. And I think we already see a lot of players announcing that they partner up with Wenalyze or similar solutions. And that is the moment where other corporates knock on the door and say, hey, you guys are working with Zurich. Can I ask you what are you doing? And they're just trying to know what you're doing and then consider that they should be doing the same. But I think once there's one leader in the market, the whole industry follows them. So I believe strongly that in 5 years from now, the situation will be very different. And it will probably be hard to find a corporate that is not using open data for commercial insurance, especially commercial insurance, because we see that, of course, all the insurers are trying to grow. And what they have realized during the last 5 years, more or less, is that personal lines is a very competitive segment already. Margins are very low. It's hard to get more clients. But SME market is still not as mature as personal lines is. So the possibility to grow in that segment and to offer a wider range of products is very big. And we see how in the top priorities for large insurance global groups, we see that SME segment is one of them. So I think the scenario in 5 years is going to be very, very different. Just to wrap up, if there's, let's say, an insurance company, someone from a carrier watching this webinar, and they are considering using these type of solutions, from your opinion, what would be the top recommendation to start working with a solution like this?
So the first thing, which is related to the pattern that we see among corporates, and that's something that we suggest to corporates more broadly, not necessarily around the data solutions and opportunity themselves, but way beyond, is skip step 1 and step 2. Don't build internally. Don't experience the fail. Just go directly to the external solution. And we see a few players that have this mindset on several solutions. And obviously, it means that all of a sudden, having validated that they will not build the solution internally, all of a sudden, they have a year and a half, 2 years of advance on their competitors, which is huge in the insurance industry, where we usually have a 3 years strategic roadmap. Every 3 years, we see corporates releasing their strategic roadmap for the next 3 years. So all of a sudden, more than half of your strategic roadmap is a competitive edge against other players on the market. So that's my first suggestion. The second suggestion, I would say, is to stay focused on the value proposition. So what matters is, again, the value, and that should help make the first choice. Because if you focus on the value proposition, then you realize that probably there are players outside that are more accurate and that could help you move faster and better. Again, having in mind that, especially on the data topic, you could benefit from having not necessarily a market solution, but rather players that are working with several competitors. And if you realize that, because you focus on the value proposition, then you see clearly that working with an InsurTech startup outside will deliver more value to you as an incumbent than trying to build something internally. And maybe related to that is also have, let's say, an open mind, because what we see in terms of InsurTech, again, we are based in Paris, but investing in Europe, 3/4 of our portfolio is not in France. And by design, not every good solution could be found on your local market, whatever the local market. So you need to have a European footprint at least. And that's something that we did with a corporate a few months ago. We showed them that if they had 3 names in mind on a single topic, the truth was that there were a bit more than 30 players across Europe. And that actually the three best one, according to us, were not on their domestic market. And again, if starting this kind of project is by design easiest with players on your local market, you should stay aware of what's happening outside of your boundaries, most probably to find a better solution, or at least to learn from what is done outside of your domestic market. So if the first reflex is to work with the local solution, the reality is that usually you could benefit from staying a bit more open and not necessarily look for someone that has his or her office at the corner of the street, especially in a remote world. And especially around data, because data have by design no boundaries, though there are specificities, and you know that better than I do, but there are several markets that are more easy to access in terms of data than others. But long story short, that's the three things: avoid the usual pattern, focus on the value proposition, and stay open in terms of geographic scope, because the good solution to your problem as a corporate could be outside of your market.
And I think that is a very, very good way to wrap up this webinar. So Florian, thank you very much for participating and for answering these, I know, challenging questions, but with so many good answers. I think your view on the global and also the European InsurTech scene has been very helpful.
Thanks a lot for having me, and thanks a lot for that very fruitful discussion, I think.
Indeed, and thank you everyone who is watching this webinar. We will be publishing one webinar per month. So this month we talk about how can InsurTech improve data quality in commercial insurance. Next month we're going to talk about how to use open data in commercial insurance with a clear return of inversion. The speaker, I can't tell you yet, but you will know in a few weeks. Thank you, and we'll see you next time. Bye-bye.
Thank you. Bye.